Good morning, everybody, and welcome to What's Hot Now here at MarketStream.live. I am Joe Cusick from the Cusick Group, securities offered by MoneyBlock. What a week last week. Russell 2000 up 10%. The Dow Jones up 5.4%. The S&P 500 and the NASDAQ up 3.8% for the week. Okay, polls, they're out. Doesn't matter. We trade what's in front of us. And that's what we're going to talk about this morning and all of the future mornings. What's hot now? We're going to look at the markets. We're going to break it down for you so that you can get the information you need to invest and trade. And right now, you're seeing the reflation trade in epic proportions, which is why you're seeing a little bit of a market right now that is slightly mixed. Right before we opened this morning, we saw that the S&Ps and the NASDAQ were a little bit in the red. Now they're firmly either break even or at the green, and we see that the Dow Jones is up as well as the Russell 2000. Now, what does this mean for you? Well, basically it means that the majority of this market is basically saying we're reluctant on missing out on this leg to the upside. This is the main attraction, the stock market here in the United States. And while this has been impressive, what's equally been as impressive, if not more, has been the move in bonds. And I want to highlight that on what's hot this morning as far as on the open, because this is the trade. Right now, we have literally seen the 10-year yield from the moment that the election results were announced, or at the lows, or right when we were going through the election, to current this morning. The 10-year yield has increased by 60 basis points. Folks, that is huge. If you've never traded a bond, I am telling you right now, that is a huge move. As a matter of fact, this morning when the bonds went over the 2.3% yield on the 10-year, we hadn't seen a level like that and a move like that basically in 11 years. And what do I mean? There's a long-term trend line on bond yield, specifically on the 10-year, that was broken after last week's move, from the lows of roughly around 1.5%, 1.6% to this morning when we saw the highs. It's pulled back. It's right around 2.23%, but around 2.3% we saw the yield hit that high. We haven't seen this long-term trend line to the downside successfully broken and held since 2005. This has been an impressive move. We've seen challenges. We've seen slight breaks, but never held it in 2014. Folks, this is epic. So we're seeing a rotation out of bonds and into stocks. What does this mean for you? If you're a bond investor, this means that you're looking to rebalance your portfolio. The yields right now are moving to the upside. That means bond prices are coming down. Talk to your advisor. The other thing is that you're going to have to really take a step back, watch these markets closely. We're also seeing some sector rotations. This weekend, I was writing some pieces and about where we're moving out of the traditional Wall Street names, high growth, high flyers, into the traditional Main Street names, those infrastructure plays that we've been discussing over the last 5 days. The small business components, right? Look, the S&Ps and the NASDAQ were up 3.8%. That was impressive. But the small cap, domestically centric stocks, as you saw, I put air quotes, are up 10%. The Russell 2000. Those could be the beneficiaries of the infrastructure plays. And we're going to continue to watch those. We're going to continue to play those going into the foreseeable future. But you need to keep your eyes on interest rates going forward. That's going to be the driver, because that money is flowing out of bonds and into stocks, and we're going to want to watch that. And we're seeing that also on a global level. We were talking about it on the overnight action report this morning, where we were discussing how you're seeing global yields continue to move in the upside. You're seeing European yields moving to the upside. You're seeing that even Asian yields are starting to move to the upside, much to the chagrin of the Japanese government, who's trying to keep it still at 0%. But it has been a positive for equity markets, and we're going to continue to watch that. One market that I want to watch, and sector that I want to watch closely with this yield move is, and we're going to watch this for the foreseeable future right now, is the housing market. Initially, this rate increase that we're starting to see now in the 10-year and the 30-year, as well as in the shorter end of the bond yield curve, that could be a little bit of a boost for the housing sector, but we're going to see if that continues, because as rates move, and if they start to move at a more rapid pace than what was expected, the housing market could come under some pressure in later stages. I don't think that's going to happen initially, but there are going to be concerns going forward that we start raising rates and rates start moving a little bit faster, that inflation trade. So we're going to watch that very closely. And the housing sector is something that we're going to talk about. As a matter of fact, we're going to talk about it in Strategy Now, and then we'll also highlight the technical components that we discussed this morning in Tech Talk. And that's going to be at 1:30 Eastern and 3:30 Eastern. Join us then here at MarketStream.live. Till then, let's keep our powder dry. Let's keep an eye on these different sectors that we discussed about. Watch rates and stay tuned to MarketStream.live. Have a great rest of the trading day, and we'll talk to you soon.